It's been a roller coaster 6 months for Apple. There you can see it on the chart. What's it going to be like in 2013? Welcome to Digits. I'm Simon Constable, and it's our outlook on what is going to happen to Apple next year. I've got Steve Russolillo of the markets team with us. Thank you very much for joining us. Always like your insight. And we've also got Gene Munster, Apple stock analyst at Piper Jaffray. He joins us now. Gene, let me start with you. Next year for Apple, you have great expectations for the stock. Tell us about that and why you think you're so bullish on it.
Well, we think there's two things going on. Number one, near term, there's going to be some of this momentum from iPhone 5, which we'll get in the December quarter, and also it's going to carry forward into the March quarter. So you should see the street estimates lift higher than where they're at right now. So that's going to start the year out. And second is that through the middle of the year, kind of a lot of the same stuff, new iPhone 5S or iPhone 6, but importantly, we think the TV is going to come in the fall, and I think that's going to be good for the multiple. And so I think 2013 is setting up for a good year for the stock, in part because of the iPhone, but also in part because of the TV.
It's interesting, Gene. You know, you talk about this year in particular and how the stock has had such a big run. Even with the latest swoon, the stock is still up about 35% for the year. So, you know, can these sort of gains continue into 2013, or are we looking at sort of a more steady ride for Apple, which is something that investors haven't really seen for many years now?
I think the question comes down to is how big are the markets? How much can Apple continue to grow? And that's ultimately the reason why the stock trades for as low of a multiple as it does, is that when you start thinking about this $175 billion in revenue for 2013, it just gets harder and harder to imagine these bigger numbers to keep the stock to go up. But I think if you go back and really look at the markets that they're playing into, the smartphone market right now, call it 500 million units, and there's about 1.3 billion total phones sold every year. There's still a lot of room in those markets for them to get into. So to answer your question is, we might not have this rocket ship, you know, these massive increases, but we do believe there's significant upside to the stock going forward because the markets they're going after are substantial.
Now, they are substantial markets, that's for sure. We've got a lot of products coming out next year from Apple. Apple radio service, iPad mini with a Retina display, iOS 7, possible iPhone 5S, Apple TV. All of those things are great, but what about consumer product fatigue, the upgrade fatigue? Oh, another upgrade. Do you think consumers will just get sick of it and in the end get turned off by that?
So that's something that we measure closely, and every 3 months we do these surveys and we try to measure that fatigue, and we haven't seen that. For example, with the iPhone, in 2011, 92% of iPhone owners said that they're going to upgrade every 2 years. When we did that survey just recently, it was 94%. And so we continue, and this is the U.S., so keep in mind it's a different market than the rest of the world, but I don't think we've seen that fatigue, and the reason why is that people are getting more value out of their devices. These apps, the 700,000 apps, that's allowing people to turn their phone or their iPad into anything that they want it to. And so I think that trend is really causing this increase in utility. And so I don't think we're close to seeing this technology fatigue.
Gene, before I hand you back to Steve, one of the things that you said, eventually the iPhone might get to 2 upgrades a year. That would mean 4 upgrades before you get a new phone. I mean, that's a lot of upgrades. Does it still play that way inside that scenario?
You know what I meant to say was people will upgrade their phone every 2 years, and so that's every 24 months. And so based on that, that's kind of how we see the math playing out for, but there's a high percentage. As I said, 94% of the people that we've surveyed said they'll upgrade their phone every 2 years.
You know, Gene, you've already kind of touched on this already, but when you look at the stock price, and even a price now that it's about in the mid 500s, and it was above 700, that just sounds expensive to people. But when you look at valuation metrics, when you look at price to earnings ratios and other things, the stock still seems pretty cheap. So, you know, what's the argument here for, you know, for Apple being, you know, quote unquote, the biggest company on the planet, still having a relatively cheap stock price?
The argument from the buy side that I hear is that given you're at $175 billion plus in revenue next year, it's just hard to continue to grow. It's hard for investors to really get their head around those kind of numbers. And ultimately, the multiple of stocks is what investors think the long-term earnings growth is. And so the reason why Apple trades at 8 times X cash, and a typical company that's growing in these rates is typically going to trade around 15 times, so it has a significantly lower multiple. The reason simply is that it's just hard for investors to get their head around this growth continuing. And that's why it's important to go back and do the exercise about the size of the markets they're going after, their market share, and how that's going to play out, because that's how you can get comfortable around this valuation.
Yeah, and just for our viewers, let me restate the when you strip out the massive amount of cash that Apple has, and then you look at the valuation of the company versus its projected earnings, that's about 8 times future earnings. I think that recalibrates what you say. Now, you said that they're looking at massive markets to go after. Do you worry about China's economic miracle coming to a standstill and that really hurting Apple?
Yeah, we do worry about that. I think that the bigger question we worry about with Apple is that the average price of an iPhone is $625. The average price for an Android phone that's sold in China is about $300. And so they're, for a price-sensitive market, they're significantly higher. And so as we look at each of the geographies and figure out how Apple's going to grow over the next few years, the China question and Apple's pricing on their phone becomes imperative. And so we're less concerned about some sort of economic slowdown because over the next decade it's hard to bet against China. We're more concerned just about the pricing of Apple's products relative to where their consumers at.
And Gene, one more for you. Just correct me if I'm wrong. I believe you guys have a $900 price target on Apple. So based on everything that you've said here, what is going to be the one main driver that's going to bring Apple from $550, give or change right now, to $900 by the end of next year?
I think the one factor that's going to surprise people is just the iPhone growth in the next year. I think the Street's at call it 190 million units. It could be somewhere greater than 200 million units. We've talked about if they kind of continue this share gain that you could have 225. And so I think that that's going to be the single factor. And then the smaller factors are going to be iPad adoption and obviously Apple Television.
Okay, great stuff. Thank you very much, Gene Munster of Piper Jaffray, and thank you very much, Steve Russolillo.